I'm Joe Mathieu, live in Washington. This is the Wednesday edition of Balance of Power alongside Kailey Leinz. We did hear a lot of rhetoric today, Kailey. We just didn't hear a lot of news when it comes specifically to negotiations with Iran, knowing that there were reports this morning, got the markets in a great and optimistic mood about a memo of understanding that came from Iranian state media. The president, the administration called that fabricated. So we seem to be back where we were yesterday with regard to this standoff.
Yeah, though we did hear more about the Strait of Hormuz from President Trump when he was asked specifically about a potential tolling system. He said the Strait of Hormuz will be open to everybody, that nobody is going to control Hormuz, and that the United States will watch over it. And interesting for him to draw Oman into this, not just Iran. Of course, Iranian state media had reported Iran and Oman would have some kind of control over shipping in the Strait. He says Oman will behave or we'll have to blow them up. So perhaps targeting another partner, frankly, of the United States in this over the Strait. Assuming
he didn't mean Iran in that statement, that did catch a few people off guard. The president earlier saying that they're negotiating on fumes, the language he used. Maybe we'll just have to go back in and finish it, maybe not. He's clearly dealing with a 50-50, it seems, still having been presented with military options. This was originally a cabinet meeting that was supposed to take place at Camp David. Because of bad weather, they did this in the White House, which kind of removed some of the urgency. Folks thought that choice of venue might be an indication as to maybe resuming strikes.
Yeah, well, we heard from the Secretary of State, Marco Rubio, that they want to give diplomacy every chance to succeed. We just aren't sure what those chances of success actually are right now, as the president continually pointed to his left to the Defense Secretary, Pete Hegseth, suggesting that a military option going back in is always a possibility.
So we've still got oil prices lower. They're off their lows of the day, but the stocks rolled over a little bit here as markets have been trying hard to kind of figure out exactly where the news is pointing.
Yeah, so let's get a sense of where these markets are pointing as we turn now for a check on those to Charlie Pellet up in New York. Hey, Charlie.
Well, hello there, Joe and Kailey. And right now we do have stocks trading lower with the S&P down 13 right now. Stocks have halted the rally on conflicting U.S.-Iran signals. You heard the president during the cabinet meeting saying that he's not satisfied in the Iran talks, casting doubt on a quick deal. So right now we have got stocks lower, the S&P 500 index bouncing off the bottom, but right now, again, a loss of 11 points. The S&P lower now by just about 0.1%. Indeed, while the cabinet meeting was underway and while the president was talking, the S&P did fall to session lows. The Dow, however, holding on to gains, up 206 right now. That is a gain of just about 0.4%. NASDAQ Composite Index down 0.3%. The NASDAQ 100 Index lower as well as the tech rally fizzles, down now by 0.5%. And the Russell 2000 Index, which had been higher earlier on, now lower, little changed. All of this with the VIX below 16, the 10-year 4.48%, gold down $60 the ounce, down 1.3%, 44.46. But as you guys alluded to, crude, the big story today, 89.67. Crude continues to move lower, down 4.5% on WTI. A barrel of Brent right now holding above 95, 95.40. Brent crude down by 4.2%. So again, recapping here, the S&P 500 index is lower, bouncing off the bottom, down now by 0.1%. West Texas Intermediate crude, 89.61 a barrel, down 4.5%. Joe and Kailey, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on the markets for us. Thank you so much. Clearly not as much optimism in the markets now as we saw earlier, as the White House, of course, has pushed back on what Iranian state media was saying about a potential memorandum of understanding. All that said, President Trump speaking with his cabinet assembled at the White House just moments ago, as we saw and heard live here on Bloomberg TV and radio, does still express a certain degree of optimism around negotiations with Iran. He says that he does think it is going well in those negotiations. But interesting, Joe, to hear him once again call back to the Abraham Accords when questioned about whether a deal with Iran can happen in absence of other countries like Saudi Arabia and the UAE signing on to the Abraham Accords. He says he's not sure if that deal should be made, if the Abraham Accords are not part of it.
The reporters in the room tried to follow up and see if that would be contingent upon having a deal. He didn't really seem to answer that, so that's unclear, remembering that he had put on Truth Social over the long weekend what he referred to as a mandatory request that those nations throughout the Middle East sign on to the Abraham Accords. That's something that emerged very late in the conversation here in the cabinet meeting. Kailey, he was also asked about whether people's personal finances or the price of gas, remembering the comment he had made a couple of weeks ago, might in fact draw him closer to or inspire a deal. He said they thought they were going to outweight me. He's got the midterms. I don't care about the midterms. Look at what happened last night. He said that was the prelude to the midterms. But of course, as we know, he dispatched a longtime senior Republican senator last night in Texas. He was referring to John Cornyn, not the actual vanquishing of a Democrat. So that has yet to be tested.
Yeah, so of course there's a lot of tests that still could come between now and November for the president domestically, politically, and a lot of that could depend on whether or not these negotiations ultimately prove fruitful and when.
Well, that's absolutely right. It's where we want to begin with Derek Wallbank, Bloomberg News senior editor, is joining us now live from San Francisco. And Derek, it's great to have you. What are your thoughts on everything that we just heard and this standoff that doesn't seem to have an end in sight?
Well, thank you so much for having me. Yeah, look, it's really clear that Donald Trump is trying to find an exit ramp from the conflict in Iran that he really started, and it's trying to get to a winning hand. And what does that look like? Now, Donald Trump has a couple of things that are difficult. You mentioned the price of gasoline. You know, Patrick DeHaan at Gas Buddy was saying that over the Memorial Day weekend, about 12 states hit their Memorial Day highs. And 7 of those states, by my count, voted for Donald Trump for president. So this is squeezing his voters, not just coastal state voters. You're talking about an average somewhere around or above, $500 million that Americans are paying at the pump extra per day. So you are seeing some economic effects there. But at the same time, Trump does not want to exit Iran in any sort of way, even though we're at a ceasefire and have been for some while, a fragile but holding one. He doesn't want to exit in any way that unfavorably compares to President Obama's Iran nuclear deal that Donald Trump was a longtime critic of before coming to the White House. So those two things are a little bit difficult because a lot of the options on the table right now are not necessarily great or are just trying to get back to a pre-war baseline.
Well, Derek, with the allusions to the Obama nuclear deal, in which, of course, we saw some sanctions relief and actual money exchanging hands from the United States to the Iranians, when asked specifically by our colleague Tyler Kendall about the idea of sanctions relief for Iranian oil, President Trump said, "We're not talking about the easing of any sanctions, no money, no nothing," suggesting that the U.S. will keep control of Iran's money. So if that's the case, if we're not talking about sanctions relief or the unfreezing of Iranian funds, what concessions realistically are on the table when it comes to Iran? Are we really to believe that there's none?
Well, I think it's a great question. I think Iran is talking about sanctions relief. I think it's one of their main points. So there is a difference that we've seen between what Iran has said is on the table and what the president has said is on the table. Certainly, when you go back to that Iran nuclear deal previously, the issue of U.S. payments to Iran or unfreezing money to Iran, or however you want to categorize that, was certainly one that Trump himself made a massive issue, and he does not want to get tarred by the same brush, right? You do have these competing kind of interests, right? On the one hand, as you're trying to find an exit ramp, there are conditions that are going to have to come with that Iran's going to have to feel like they want to do too, because they have agency in this stake as well. It's not just an issue that the United States is in position to just write the terms of this and everybody else is going to sign on. That's not where we are at this moment right now. So Iran's going to have something to say about that as well, and that increases the level of difficulty here. It's also why I'm looking very heavily at what Trump's allies are talking about, and you can see some Republicans on sort of the more hawkish side, still Trump allies very, very much. Lindsey Graham, is very, very close to the president, for example. But the hawks in his conference, in his coalition, have been saying quite openly that they don't want him to sign on to some of the things that have been rumored that are floating around that might be on the table. So he's getting pushback there as well.
All right, Derek Wallbank, Bloomberg News senior editor, thank you so much for joining us. And we want to continue the conversation and get some analysis now from Jeanne Gavito, senior advisor with the Cohen Group and former acting principal deputy assistant secretary of state for Near Eastern affairs under President Biden. She also served in a number of diplomatic roles under Obama and Trump one as well. Jeanne, welcome back to Bloomberg TV and radio. As we consider the prospect of a diplomatic breakthrough here, it seems once again the two sides, at least in public, are talking past each other, both suggesting that one side has agreed to something, the other side says absolutely not. Do you have any sense of whether real forward progress is being made?
So I do think that the fact that the negotiations are ongoing remains a positive sign. And fundamentally, at the end of the day, this is only going to be resolved through negotiation, not through military force, regardless of whether the president chooses to revert to that or not. I do find it concerning, though, in the statements coming out of the cabinet meeting, that the president has again reverted to very maximalist positions that make it much harder, I think, for him to walk back from in a domestic sense, saying things like it's not enough to destroy the nuclear material in the country. It has to be shipped out. That's very difficult to do. And on the point of economic relief, that is indeed Iran's #1 requirement, some sort of relief of economic pressure. And so fundamentally, again, as your correspondent just said, this is a negotiation between two parties. Both of them have agency, and there's going to have to be some amount of concession given by both sides in order to bring this over the finish line.
Well, it's always great to spend some time with you, Jen. I just checked while you were talking. Last time you joined us here on Balance of Power was 3 weeks ago when the Iran war hit the 60-day mark. Has anything actually changed in that period of time?
No, very little. And I think that this is a reflection of, what President Trump is grappling with right now, which is competing instincts. On one hand, to cut his losses. Again, going back to the idea that this conflict is not going to be won militarily. And so you can walk away and try to get whatever you can out of these negotiations, or you can return to armed conflict, which he again suggested today he might be willing to do. And to your point, Joey's been recommending this or suggesting that this might be in the cards for the last several weeks. I think the fact that hasn't happened yet, though, is a reflection of the reality that it would not fundamentally change the calculus. And so I think we're stuck in this limbo of the perfect being the enemy of the good, frankly.
Well, what is the good as you would define it, Jen, as the president continually says he's not going to make a deal if it's not a great one? What do you think is the best the United States can hope for at this point?
So I do think that a strategic victory here is going to prove extremely elusive. Probably the best that can be hoped for at this point is that the Strait of Hormuz is opened without conditions and that global trade recommences largely at the scale eventually at which it was 12, 13 weeks ago when this all began. I think in order for the president to strike a deal, for this to not be kind of a strategic loss for the United States, there will also have to be some progress on the nuclear issue. But if that progress looks like agreement to push out enrichment timelines for a period of a number of years, and to give up in some way, not necessarily shipping out of the country, those massive stockpiles of highly enriched uranium, I think that is probably about as good as it's going to get, especially combined with the fact that the United States military has indeed done significant damage to Iran's drone and missile programs. Those will be rebuilt in time, and that will continue to be a concern, just like it will continue to be a concern that Iran can wield the weapon that is now the Strait of Hormuz at time of its choosing in the future. So the options are fairly limited, but so are the options for fundamentally changing that calculation.
We haven't mentioned Israel yet. Jen, before you leave us, how important is the activity that we're seeing, the continued fighting between Israel and Lebanon, and will that be what keeps a deal from being struck?
This is extremely consequential. Prime Minister Netanyahu has reportedly told his advisors that he's frustrated by the lack of leverage. that he has over President Trump, and has been openly concerned about the parameters of the rumored deal that is taking shape. And to be clear, whatever quibbling happens over that deal, that will continue to be the case. For Israel, this will not be the outcome that they wanted. And so with very little leverage directly, and with Iran having tied a more permanent ceasefire in Lebanon to its willingness to make a deal with the United States, that is leverage that Prime Minister Netanyahu can wield. Certainly, Hezbollah has done its part in this conflict, having launched well over 100 rockets into northern Israel. But both parties, Prime Minister Netanyahu and Hezbollah, have good reason in their own minds, for their own reasons, to play the spoiler in this, and that is, I think, what we're seeing play out now.
Jen, it's always great to spend some time with you. Thank you, as ever. Jen Gavito with the Cohen Group. I'm Joe Mathieu alongside Kailey Leinz in Washington as we add the voice of Jeanne Zaino to our conversation. Bloomberg Politics contributor, Democratic analyst, and democracy visiting fellow at Harvard Kennedy School's Ash Center. Jeanne, we've got a headline from the Associated Press. Since we took air today, the Israeli military is telling residents across southern Lebanon to leave as it expands operations there. And this comes as the country launched more than 120 airstrikes against Lebanon in the last 24 hours. Is this the actual conflict we should be paying attention to?
It certainly is. I mean, I think we have to pay attention to both. But of course, Benjamin Netanyahu said publicly that none of what the president reported over the weekend and the back and forth on a potential memorandum was going to stop him from putting the pedal, he said, harder on Lebanon than he was. And that is what we're seeing. And interestingly, you've also got a group of people saying, if the president is able to negotiate an end to the war with Iran, Benjamin Netanyahu and Israel will be so unhappy that we will have to turn our attention more directly to Gaza, the West Bank, and Lebanon, where we may see even more attacks occur as they continue to battle on. And so, this end of a potential war, if we get it with the U.S. and Iran, is not going to end that conflict. And Israel and Benjamin Netanyahu have been very clear. None of the objectives that the Prime Minister of Israel set forward when this war started have been met. We've still got Hezbollah. We've still got Iran's regime, despite what the president said, and we still have a nuclear Iran. If they don't address those in a deal, he is not going to go quietly into the night.
Well, and so long as there's not a two-state solution, as you allude to Gaza, Jeanne, it seems unlikely that many of these Gulf states are going to be signing on to the Abraham Accords. And yet President Trump suggests that without the additional sign-ons from countries like Saudi Arabia and the UAE, he's not even sure a deal with Iran should be made. What do you make of the moving of the goalposts here?
Yeah, I think when the president first raised the Abraham Accords, it was really to try to change the conversation. The president, I think, is really right when he is imploring that he needs to get out of this situation. He is correct. He is desperately trying to find a way out. When he put forward this potential memorandum, he got a lot of pushback, including from Netanyahu, including from people like Lindsey Graham and the Hawks. So he thought he might try to adopt the Abraham Accords as a way out. Of course, he was praising the UAE in that meeting for being a member, but it's very clear when you're talking about Qatar, Saudi Arabia, they say that is a non-starter without a Palestinian state or the promise of a Palestinian state. And Israel has been very clear there will not be a Palestinian state. So I think what we're seeing is the president sort of publicly, whether it's on Truth Social or in these meetings, trying to figure a way out of a very difficult situation. That is this war of choice that he's gotten himself into. I don't think there's anybody who expects that those countries in the Middle East are going to sign on to the Abraham Accords unless there's a promise of a Palestinian state. And that is not likely to be forthcoming anytime soon.
The president goes out of his way, including today in the cabinet meeting, Jeanne, to remind us how long the Vietnam War lasted, the Korean War, World War II, and others. He says this has only been going on for a couple of months. What if this, in fact, does not end before the midterms? What if this standoff continues for the next 6 months or so? We've got oil prices heading lower on hopes for a breakthrough today. But the timeline could be extended dramatically here, could it not? What would that mean for political fortunes in the midterms?
It's very difficult. Despite the president saying at the cabinet meeting, there is no connection. I am doing wonderful. Look at what happened in Texas and elsewhere. He knows full well that there are political implications for his party as a result, just on the issue of oil and gas alone, let alone the cost of everything else. He knows that. The Republican Party knows that. The problem they have here is one of the clock. If they make an agreement today, it'll still be 2 to 3 months before the strait is reopened, and unlikely we have a nuclear deal. And, you know, even if they get a 60, 90-day pause, reopen the strait, is the president really going to consider around Labor Day renewing strikes against Iran? I mean, none of this is palatable. And of course, that's a big if. So these are very, very consequential impacts for Republicans in the war. And we see that in the polls. We see that in the consumer confidence numbers. People are feeling very, very concerned about the impact of this war. And the war is not popular. And I don't think we've ever seen a war, Joe, in American history that has gotten more popular while it dragged on. So the longer this goes, the worse for Republicans and the president in the midterm.
All right, Bloomberg Politics contributor Jeanne Zaino, thank you so much for helping us work through the aftermath of the cabinet meeting the president convened, of course, just earlier this hour at the White House. And Bloomberg's Tyler Kendall was in the cabinet room for that meeting and had a chance to question President Trump directly about this war with Iran. And she's now joining us live here on Bloomberg TV and radio. So, Tyler, you pressed him specifically on whether or not sanctions relief was being discussed. His answer was no.
Well, yeah, Kailey, at this point, the president telling me in part, quote, when they behave properly and when they do what's right, we'll let them have their money. But I asked him about the potential for an easing of sanctions to allow Iran to sell Iranian crude to market, because we know that Iran has been demanding some sort of form of financial relief as part of these negotiations. But for now, the president is maintaining that that economic pressure campaign is going to be maintained. And that's important because we're trying to glean any sort of details on what a potential agreement will look like as the two sides discuss this memorandum of understanding. President Trump did say in that cabinet meeting, telling us reporters that no country will have control over the Strait of Hormuz, as we know that Iran, working alongside Oman, is trying to exert that control through some sort of formalized system. Joe and Kailey, quickly, I also asked the president about whether or not a federal gas tax holiday could still be on the table, as we know that the administration is coming under pressure when it comes to those higher retail gasoline prices. He told me that it is something that they might talk about, but that we're going to have to see what happens in the next 1 to 2 weeks' time.
Really interesting, Tyler. He seemed to be unsure when you asked him about that gas tax holiday, even after talking about that as a priority a couple of weeks ago. With us live from the White House, thank you, Tyler Kendall, our Washington correspondent. Of course, gas prices, specifically jet fuel prices, have a lot to do with the conversation that we're about to hear. And as we watch prices pull back a bit today, we're seeing airlines, cruise lines, other travel-related stocks get a bit of bump out of some of this relief. And it's a perfect opportunity to bring in our colleague Lisa Abramowitz, who brings us an important conversation now with the CEO of American Airlines. Lisa, take it away.
Thank you so much, Joe. I am here with Robert Isom, the CEO, Chief Executive Officer of American Airlines, here in our New York office. Thank you so much for being here, Robert. Great to see you.
It's great to see you.
And right now, we are looking at oil prices on a daily basis, as is your share price. Before we get there, though, I want to start with just consumer demand. There have been a lot of questions about how resilient consumer demand actually can be as this conflict goes on. What have you seen so far?
People want to travel. I think that there's still some consciousness that travel is still a bargain. Really, we're just getting back to yields that we had in 2014 and 2019. So that sense of travel as a bargain, I think, is apparent. And what we've seen, tremendous demand in the first quarter. American Airlines year-over-year revenue improved 10-11%, and we're forecasting revenue to improve 15%, year-over-year. And that's some additional capacity in there, but a lot of unit revenue performance as well, which suggests that people, are finding great value in travel.
Where is the demand coming from? Is it leisure? Is it business? Is it both?
It's all of the above. And it's business, it's leisure, it's domestic, and also international is still leading the way. Premium is still outpacing leisure, but I really like what I see. And in terms of capacity, I think that it is responding to market dynamics. I think that the industry is stretched in terms of margins, and at least for us, I like what I see in terms of how we're set up.
You say capacity is adjusting. Does that mean capacity is coming down and prices going up?
Well, we've pulled a little capacity out, and we'll of course take a look at what's happening later in the year. We're very margin conscious. I mean, at the end of the day, that's what we're in business to do. But right now, demand is very robust. And as we look at closing out the second quarter, we're going to close out the second quarter in a really strong fashion.
Have you seen any businesses pull back on business class travel? We've heard some companies start to discuss that type of measure just because of the cost. Have you seen anything like that?
Not at American. We're business travel is up 13% year over year. And I think it's really responding to some of the things that we've been laser focused on. We have 4 pillars. One is elevating customer experience, growing back our network, really make sure we're driving premium revenue, and then leading in loyalty. And all of those are resonating with our customers right now. And American has done better year over year on a quarterly basis, last 5 out of 6 quarters in terms of unit revenue production. So I like what I see.
You've talked about how there's an estimated $4 to $5 billion of costs for 2026 as a result of fuel prices being elevated. How much of that can you pass along to customers?
Well, it's a big shock right now. And I am very confident that as things even out, that will translate into gains for American and our shareholders. If you take a look back at the first quarter, we were projecting solid profitability in the first quarter, which is usually a tough quarter for us, but for the shock in fuel prices. And the same thing, think about in a year where price of fuel is spiked, $4 or $5 billion, we're still projecting the same type of profitability that we had last year. That means good things. In terms of what we hold, I really do think that there's some stickiness to a lot of what we're doing, and it's upside that's unique to American. But there's a rising tide as well. Everybody's got to be margin conscious, and of course there's been some struggles in the business among those that are serving the lowest cost demand or the lowest revenue demand.
Just to sort of put a bow on that, in other words, when you are passing along price increases, do consumers push back, or are they remarkably resilient and just accepting it because that is the status quo across the industry?
No, we're trying to give our customers something that they really value. So, I know that our basic economy product offers incredible value to those that avail themselves of it, but we're giving people buy-up opportunities as well. And from a product perspective, you name it, flagship suites, the new flagship lounges, opening up new routes, all of those things appeal to our customers in a way that they say, hey, I can find real value in what American's offering.
How crazy is it going to get? Private plane, half the plane is a personal sort of suite where you have entertainment?
Well, I like what we're doing. We're looking at the entire fleet, but the investments that we're making that are coming to fruition right now are really an indication of we skated to the puck in the right place. So our flagship suites that are on the 787-9s that are delivering right now, fortunately on time, 321 XLRs are coming in. But not only that, the reconfigurations that we set out to do a few years ago on our 319s and our 320s, it's all increasing the mix of premium seating. It's going to grow probably at twice the rate of our leisure, our general cabins, our main cabins. But I really like what I see in terms of that premium product. It's leading the way, and it's very positive.
You talk about some of the issues that we've seen elsewhere, particularly in the budget carriers, Spirit going bankrupt among them. How do you see that in terms of an opportunity to gain share? Is this a time to see what potential business you can pick up from the likes of Spirit now that they're defunct? Is this a time for mergers and consolidation in that way?
Well, I'll start with this. American has the most comprehensive network in North America. And that's something that our customers can avail themselves of, take advantage, and really get to anywhere else in the world with our partners as well. So as we take a look out into the future over the next 5-10 years, our network, Miami-based, a large hub, DFW, Phoenix, Arizona, you name it, Charlotte. We're in all the right places where economic growth is going to happen. So first and foremost for us is growing our organic network and making sure that we're doing well. And then opportunistically, if assets become available, by all means. And as well, we have a great set of partners, joint business across the Atlantic with IAG, which includes BA and Iberia, with JAL across the Pacific, with Qantas in Australia.
So assets become available, meaning planes and maybe gates, not necessarily entire airlines?
Planes and gates, but planes and gates first and foremost, and how we've really fleshed out our network. I want to give a shout out to our team. They do a great job taking care of customers every day. Reliability is key. So when I talk about customer experience, that is front and center, and they deliver it every day. But anything that we can do to add to the franchise, we're doing it. And then, of course, we've been really creative in the past, whether it was the NEA, which a judge, I think, inappropriately struck down, would have benefited us in JetBlue, or what we're doing with Alaska Airlines, West Coast International Alliance. All of those things are just creative opportunities, and we'll continue to look for those. But in the meantime, there's more upside in American than really any other carrier because of what we've been doing in investing in our 4 commercial pillars, and because of the fact that there's, quite frankly, more ground that we've had to make up.
So a marriage between American and United, not in your bingo card?
That was a no from the get-go. And at the end of the day, doing something that would be viewed as anti-competitive by just about everybody that looked at it is just something that we don't spend a lot of time on. And that's why all of our attention is directed at really making sure American takes advantage and gets set up for when fuel prices normalize a bit. That's going to mean good things for us.
Do you think that American can thrive even with oil prices where they are today?
Well, you take a look at the later teens in the United States. Airlines made good money with oil prices above $100 a barrel. Now, my own view is I don't believe that oil prices will stay at this level. I think that the conflict in the Middle East at some point is going to be resolved. And I want to thank all of our service members for what they do every day. I want to thank the administration for making sure we get through this. But on the other side of this, I'm really confident that we're set up better than anybody to take advantage of fuel prices that are more moderated levels.
Do you think that right now, the way that things are set up, if the prices that we have today at like $90 a barrel or $85 a barrel, you could return to the profitability that you had forecast at the beginning of the year?
Well, it's going to take some time, but that is certainly the intent. And not only that, I mean, it's not just what we forecast this year, but for us, I look for pre-tax margins to get back into the higher single-digit levels. And the way that happens is keeping a close eye on the marketplace, and ultimately, we're in this business to make a margin. I think it's different in that a lot of the lower-priced competition is really having struggles. And so as we go forward, if there's a need to reduce capacity to get back to a business model that produces acceptable margins, we're going to do that. Right now, we see considerable strength. I hope that this is more of a blip that is, months in the making, as in, years in resolving. But when we get through this, we'll be in great shape.
Robert Isom, thank you so much for being with us today. Robert Isom, the CEO of American Airlines. A wonderful summary of exactly how a lot of the airlines have managed through a difficult time with the incredible resilience of the consumer. Everyone wants to travel. Joe, Kailey, back to you.
All right, Lisa Abramowitz, thank you so much. Live in New York with the CEO of American. And fascinating to hear Robert Isom there talking about how he does think oil prices will go back down and that the conflict in the Middle East will resolve at some point. But the question we still have here in Washington is, when do we reach that point, and how do we get to that point? Will it be diplomacy or a return to military means? In a cabinet meeting at the White House earlier this hour, President Trump suggested both options are on the table. And while he is seeing progress toward a deal with Iran, he's not sure he wants to make one if the Abraham Accords aren't involved. And of course, he also suggested he won't make one at all if it isn't great for the United States. We have a question of the goalposts here and whether or not we can reach them. The president was asked in the cabinet meeting, Joe, if this was a football field, what yard line are we on? He didn't answer that exactly. And so a lot of these questions remain unclear.
He chose not to answer a series of questions, including whether signing on to the Abraham Accords would be a prerequisite and whether he would pursue, as he promised at one point, a gas tax holiday. Maybe there was enough pushback on Capitol Hill over that idea that it's not going to happen, but we're still pretty close to $4.50 a gallon when you look at AAA today, and that part of the story has not changed.
Yep, with oil still hovering around $90 on WTI, even higher, of course, for Brent. So let's get a check on those oil prices and markets across the board as we turn back to Charlie Pellet.
All right, I thank you very much indeed. That is where we begin. Crude oil, the big story today. WTI below $90 a barrel, 89.67 right now. It is down by 4.5%. Brent, the global benchmark, 95.26, drop there of 4.3%. We did hear Robert Isom talking about the outlook for energy, saying he does not see oil staying at these levels. Also, American Airlines, or airlines in general, as an economic indicator, says his airline is seeing tremendous demand for travel. American Airlines shares, they're up right now by 0.4%, but among rivals, UAL up 6.4%, Delta up by 2.8%, all pushing higher right now. It is a day in which the Dow is advancing, the S&P 500 index and NASDAQ are retreating. S&P 500 index down 7 to 75.12, a drop there of 0.1%. The Dow up 183, up by about 0.4%. NASDAQ down 40, a drop there of 0.1%. The Philadelphia Semiconductor Stock Exchange Index retreating now by 2%. The VIX holding under 17, and a 10-year at 4.48%. Gold down $56 the ounce, 44.51, drop there of 1.2%. And again, West Texas Intermediate crude bears repeating. WTI 89.57 a barrel, down 4.6%. Brent 95.19, drop there of 4.4%. Joe and Kailey, that is a Bloomberg Business Flash.
All right, Charlie, we appreciate that. Charlie will be back at the top of the hour as we kick off Bloomberg Business Week daily. That's only about 10 minutes from now. Of course, we spend so much time talking about the looming IPO of SpaceX, not to mention the success, the most recent success of NASA's Artemis mission, all geared toward getting back to the moon. SpaceX has even more lofty goals to get back to Mars. We spent some time earlier today with the NASA administrator, Jared Isaacman, in conversation with Bloomberg Tech co-host Ed Ludlow about timeline, exactly how long it will take to see through some of these goals and return to the moon. Let's listen.
Starting in 2027, you should see a near monthly cadence of robotic landers on the moon. Several rovers. In fact, we provided an award for the first two crewed and autonomous capable rovers for the lunar surface. So when our astronauts arrive on Artemis 4 in 2028, they're going to already have some infrastructure of the moon base waiting for them. They're already going to have a rover waiting for them.
And then in that time frame, it's not just intermittent anymore. It's not just those monthly visits. But when do you think people will be working? Humans might even be living in some capacity on the moon there.
So we are approaching the moon base in phases. So phase one is a lot of littles. We are dusting off the playbook that worked very well for NASA in the 1960s. We're getting back to an iterative approach. So, there was the Mercury program before there was Gemini. There was Gemini before Apollo, and an awful lot of Apollo missions before we went right to the moon landing on Apollo 11. We are doing the same thing now. So phase one, we're calling it a science of survival. We're not going to lock in what the mobility strategy should be for logistics, for astronauts, the power strategy, the surface comms, the orbital comms. Why would we try and nail and get all of that perfect today when we haven't been to the moon in more than a half century? So phase one will be a lot of landings, again, that near monthly cadence to learn and inform phase two, where perhaps now you're putting a lot more tonnage on the lunar surface. You have a lot more direction as to the type of hardware and capabilities you want to lock in on. So you don't need to have maybe monthly landings when we get into phase two, but you have a lot more direction as to what should work for our intended objectives, which is to build out that habitable environment. And then phase two, we're going to learn now, having astronauts go from, let's call it a period of maybe even days on the lunar surface in phase one to potentially weeks in phase two, to where you might get, by the time we move into phase three, a similar astronaut rotation like you see on the International Space Station, where we could have crews potentially being on the lunar surface for months on end.
You don't have that marked on your calendar, Administrator, when phase three might have a base that has humans actually living and working inside it?
Oh, we absolutely have timeframes. I mean, we are looking at basically 2027 through 2029 for phase one. You have 2029 out into the early 2030s for phase two. But again, this is all going to be informed on what we learn during those first landings in phase one.
NASA Administrator Jared Isaacman in conversation with Caroline Hyde and Ed Ludlow. So maybe not pack your bags for the moon base yet, Kailey, but this is just years away. Can you imagine not only the idea of a monthly cadence of moon rovers, but a permanent human presence is quite remarkable to consider.
Yeah, in such a short timeline. Of course, perhaps not a coincidence that they're talking about ramping up the cadence of these things while President Trump is still in office.
Well, that's correct. SpaceX at one point was talking about the potential for daily launches. Once we're building data centers in space, we're going to need a new network if we're going to cover all these launches. We'll just have rockets on TV all day, every day.
That'd be pretty cool.
It would be really cool.
Joe Mathieu might be volunteering himself
I think I want to keep
for that
here.
job.
Yes.
Well, of course, we're going to be talking a lot more about space as we get set for SpaceX's IPO within the next,
biggest ever
couple weeks. That's something we'll continue to cover for you here on Bloomberg, and we'll continue to cover politics for you here in Washington as well. Whether or not we're seeing any progress in the diplomatic effort when it comes to Iran, and also the aftermath of Senator John Cornyn's loss in Texas last night, what it means for the midterms. We'll get into all of that in the late edition of Balance of Power at 5 p.m. Eastern, right here on Bloomberg TV and radio.